Mr. Taneja, simplify this, that what is OPEC Plus, and could you please share a detailed overview of this news that we are hearing on production halt?
Well, OPEC, as you know, is an organization of petroleum exporting countries based in Vienna. This is basically a cartel which is, has members who are big oil exporter. And their agenda is very simple. Their agenda is to work as a cartel and to make sure that they get the maximum possible price for oil that they produce. And when we say plus, it means that it has some other countries also. They're not formally members of OPEC, but they work almost in tandem together with OPEC. The main country there is Russia, which is also one of the major producers of oil in the world. So they have now taken the decision basically to go for production cut in the region of about 1.6 million barrels a day, which means that, 1.6 million barrels of oil will disappear from the market over the coming few months. So the whole strategy of OPEC, which as I said is a cartel, is to make sure that the oil prices remain high. We have seen the last few weeks the oil prices have been dipping. They've been going down. In one case it went down almost close to $72 per barrel. And of course OPEC was very unhappy with it, and so was Russia. So now they have taken the decision to cut so that, to make sure that the prices start going up again. And in fact, prices have started going up again. Because since COVID and economic slowdown and recession, the demand for oil has been going down. So now they adopt as a strategy that they will go for production cut, pushing the prices up, because at the same time demand is increasing in geographies like India, but the entire world depends on oil. So when you go for this kind of production cut, it comes as a shock for the global economy.
And Mr. Taneja, when we try to understand this news in context of our country, India, which imports over 85% of its crude oil consumption, what impact will it have on India?
Well, you see, we are very much an oil economy, and we are also heavily dependent on imports. When you look at the large economies of the world, we happen to be the economy which is most dependent on imports, more than China, more than any other large economy, which means when the oil prices go up, it of course creates a lot of inconvenience and problems for our economy, since we import roughly 85% of our total requirement of oil. Of course, big chunk of this oil that we import, crude oil with the import, is also kind of exported in the form of petrol, diesel, turbine fuel, etc. to different countries. We export petroleum products, as they are called, to about 106 countries around the world. And that is also a major export for our economy. But that said, at the same time, whenever oil prices go up, it does create a lot of problem for us. And, now the OPEC decision is a decision which, of course, is India, China, other large importing countries are very unhappy with it. Even the, developed economy like the United States have almost protested. Japan is also very unhappy with it. And we consume roughly 5.2 million barrels of oil every day. That makes us the third largest consumer, and we are also the third largest energy market in the world, mainly oil. So in such a situation, when prices go up, it creates problem for everybody, whether you are an industrialist or a big corporation or manufacturer or just a small user buying petrol for your scooty or whatever. So it does create problems. So it has a huge impact. But at the same time, the governments have withdrawn the taxes that you refer to. Those are mainly the taxes on exports that we do of petroleum products to, as I said, 206 countries. So which means that, exports will become more attractive. And the government also want that, the first priority of all our refiners, whether public sector, the private sector, should be the Indian consumer, both individual consumer and the industrial consumer. So that's the government policy, to make sure that petrol, diesel, petroleum products are available to every single consumer across the country. So it was for that reason the windfall tax was imposed, to discourage export. But now the situation is a little bit normal. So therefore that has been withdrawn, to make sure that at the same time that continues to be a major export item, which, as you know, that India is a major refining hub, and India is a major exporter of refined products to all countries, including rich countries like the United States and Western Europe, etc.
And Mr. Taneja, there's also a speculation that this news might affect India's macroeconomic variables, including a range-bound rupee, balance of payments, and foreign exchange reserves.
We are a big importer of oil, and as the oil is traded in dollars. So whenever they increase the price, which they have, that's the agenda of OPEC. That means that we will need to buy more dollars from the market, and in order to pay for our imports. So for absolutely no reason, no fault of ours, we will need to pay more. And at the same time, since oil is at the center of our economy, we are broadly speaking in an oil economy. When oil prices go up, that has a kind of spiral effect practically on everything, because consumer products to vegetables to energy production to transport, you name it. Every single vertical of the Indian economy is impacted. And even the household economy, right from the bus fee for the kids and LPG cylinder, practically everything. So these things are largely imported, as you know, that including LPG, which is used as a domestic gas. So it has a huge macro. You look at it, is a huge impact. At the same time, impact the value of rupee, because when we buy more dollar, that affects, of course, the value of rupee vis-a-vis dollar, and for that matter, other hard currencies. So for us, whenever the prices go up, it really creates a lot of problems. And the other reason is that the oil prices have been dipping, so consumers thought that maybe we'll be able to kind of buy, or the company will be able to reduce the price of petrol and diesel in coming few weeks and months. And so everyone was hoping for that. But now that's unlikely to happen, because instead of going down, the prices have actually gone up, and they might go further up. So in such a situation, Indian refiners will have to work even harder to make sure that they can protect, insulate the ordinary consumer to the extent possible. But overall, you see, whenever the prices go up, it's always a bad and hard news for the ordinary consumer.
And Mr. Taneja, yesterday when we got the news of OPEC production cut, and today the central government cut all windfall tax on crude oil from 3,500 per ton to zero that you were mentioning earlier in the answer. In simple words, how can you describe this windfall tax cut and how significant it could be for the citizens of India?
Well, you see, the whole idea was that, we are an important, significant producer of oil in the country. We produce oil in the Bay of Bengal, in Assam, in Rajasthan, in the Barmer area, and in Gujarat, and in Bombay offshore, and also in parts of Andhra Pradesh, and also in few pockets in southern part of the country. So, which means that, but at the same time, the government policy is that whether oil is produced domestically or oil is produced in oil assets owned by Indian companies overseas, the price will be the same as the international price, which means that you may be producing oil in India, but the price you get is the same as you get overseas. So which means when the OPEC takes the decision, prices start going up. E&P companies, exploration production companies such as Oil India, such as Cairn, such as ONGC, their income goes up because they're getting more money. Per barrel, they actually get the same money as, for instance, others around the world. So their income goes up. So the government decided to impose a kind of windfall tax. So the theory was simple, that you're getting windfall tax for no extra expenditure, for no extra reason, you are making more money. So what the government did was to kind of impose a windfall tax and then use that money in order to insulate the ordinary consumer from the higher oil prices, which means that give that money to companies that retail oil and gas in different forms so that the ordinary consumer is protected. So it's a mechanism that whenever oil prices go up, the government can impose windfall tax on the companies which are producing oil within the domestic borders and shores. So now the government thinks the prices have gone up again, so they have basically decided to withdraw the tax. But the prices went up. Prices were going up and down at the time when the Ukraine war happened. When the Ukraine war happened, prices went beyond $110, while the production of cost it didn't go up. So that's why the windfall tax was imposed. As I said, the strategy was simple, the government policy was simple, to make sure on the one hand these companies don't get earn extra profit, and at the same time use that money in the form of a windfall tax and pass on that to the retail companies so that the ordinary consumer, ordinary Aam Aadmi is protected.
And Mr. Taneja, the decision by OPEC Plus to cut crude oil production led to a sharp rise in global crude oil prices that you were saying. Can we say it is renewing the inflation concerns that we had?
Oh, absolutely. Whenever the oil prices go up and in a very deliberate manner, because there are no reasons for them to do that. There are absolutely no reason except for the reason that they want to make more money. It's greed, basically. I mean, they say that, look, Saudi Arabia needs more money for their internal reasons and for their building infrastructure and all that. But why do you expect the world to pay for that? So, therefore, I mean, it's a deliberate decision. Their own interest, call it greed, call it by any other name. But, of course, but for the global economy, it's going to make recovery difficult. It's going to kind of, add to inflation in most countries, including United States and western part of Europe and even India, and several other countries which are heavily dependent on imports or energy deficit. So I think, they have taken this decision, which in my views, is a very selfish way of looking at the picture, and completely ignoring that if there is inflation in the western part of the world, in India, in China, and other countries, in the long run is only going to be actually harm them, because countries have more money, they can buy more oil and pay better price. But if you do it deliberately at the time when inflation has become an issue, recession has become an issue, then of course you are only complicating, creating troubles for these countries, which they are. So I think short term they might gain, but long term they would also be the loser.
And with your insightful inputs, thank you so much, Mr. Taneja, for joining us today on All India Radio.
Thank you.